Very good morning, everybody. Trade Live with IG with myself, Rich McDonald. Welcome to the Tuesday, the 21st of October. And yes, my shiny-headed friend is sitting here beside me. Come on, Scotty, how are we doing?
Hello. Yeah, good. It only seems like yesterday I was here. Not quite yesterday, but it's flown by since Friday. Very glad to be back. Sorry that Angie's not here for everybody, so you've got me.
Have we had an update where she is?
I don't actually know.
I think it is. No, nothing. Yeah, and usually we get some excited messages telling.
Yeah, exactly right. I mean, she's normally very good at staying in touch with what's going on. So yeah.
Good morning, everybody. How are we doing? Maturing. What are we talking about? The Swedish krona. We got a good story about that. So back in the day, there was a ginger-headed Scottish trader on the desk, and his boss was a guy called Simon Litchfield. So they were on the oils pitch, and they had a position in a stock, and Pete, that was his name, wasn't it?
Pete, that's right.
Yeah.
Yes,
So Pete, anyway, Pete kept on at this position, and he was short, and the thing went up in his face. Anyway, they were down 6 million. So Litchy looked down at the screen and said, "Pete, what the hell is this? We're down 6 million." He goes, "Don't worry, Litchy. It's only Swedish krona." So he was still down $1 million.
Yeah, not really the kind of response you want.
Yeah, so that was for the next 15 years on the desk at Credit Suisse. Then whenever somebody said Swedish krona, they had to say it in a Scottish accent.
Absolutely.
So yes, there are a lot of earnings out today. Gavin Ackers is telling us we're going to go through those. We're going to go through the numbers that just came out from the UK on their debt. But what else have we got coming up on today's show? Well, it is myself and Baldy Byrne.
Honestly.
Yeah, Baldy.
Baldy? Yeah. Yeah. That was one of my many nicknames, just in case you think Rich is being particularly insulting today. He's fine. So Rich and Gru on at until 8:10 with the guess the chart, which...
What's that, 8:15?
Technically speaking,
yeah,
Scotty Byrne. So not only, as I was saying to Rich yesterday, not only was my whole career highlight being able to print stuff off, which we've now had today, is that now and again there is the odd bit in the brain that comes out which is hopefully useful, which is what we're going to try to do today. We're going to have about 15, potentially 20 minutes where we're just going to go through some of the, as I said on the Discord yesterday, how the hamster wheel in my brain works, but hopefully we're trying to get that down into some sort of a format which makes sense to people. So we'll be talking about a few topics: sizing, risk management, looking at charts, and so on. And we're actually going to be using naked charts today because we've had a lot of chat on the Discord about...
That's a scary thought.
Absolutely. We've had a lot of chat on the Discord about indicators, which we're not going to be using. Expert Edge, now that is going to be good.
Yes, Julian Wheeler back in. So we're going to be talking about the debt debacle in the States last week, and then looking ahead to some earnings that we've got, including Netflix tonight. And then 9 a.m. there she is. We didn't want to go 2 weeks without you getting to see it.
Couldn't happen.
So Pete Hambro and his gold, not bullion, his no, what do we call it? The talons.
The talons, yes.
10
that's right.
talons.
Yeah.
And also the little treat that he brought in us of a gold coin from when Jesus was born. So we think that Peter was one of the three wise men.
Like it.
Now, talking about wise men.
Yeah, that's definitely not me. But I suppose we could be. I suppose if I was sitting on it as well, you could have the three wise men.
Yeah, let's go to overnight action and have a look at these public sector net borrowing debt numbers in the UK. Right, so yesterday was a little bit interesting day. It was there was comments that got us going. There was, I guess, a bit of relief that got us going a bit higher.
Yeah.
But all in all, the Nasdaq up 1.3%, and the S&P not far behind. We had a strong day in the DAX. The DAX up 1.8%. Scott, you had a theory why that was so strong.
Well, we saw the defence names really roaring back because the last few times we've looked at the DAX, Rheinmetall hasn't really been the driver, right? Because it's quite well held. The defence story was running out of steam a little bit, but it looks like with some of the Zelensky-Trump antagonism again and some of these extra developments around Ukraine, which may get resolved this week or get more detail around it. And ThyssenKrupp are spinning off their warship division in an IPO as well. I don't have any of the listing details, but that was a headline on CNBC overnight. So yeah,
they had a warship division.
I guess an engineering company like that, you're going to make those things, I would guess. So yeah, that was just a big sector driver yesterday. We'll see if that follows through today. But yeah, that was quite an interesting one. That just suddenly jumped into life after the weekend.
So where does this leave us on the futures this morning? Well, little unchanged in the US. In the FTSE, we were strong because we were about 93.90 yesterday. But it was a relatively, certainly wasn't the area that people were looking to put money into. Neither was the CAC. The CAC was only up 30 basis points. So Germany, real outperformer. Then the Russell back up to 2,500. We've got Vol got absolutely smashed.
Yeah.
So Vol dropping from the 21s down to 19.5. Oil, no real bid there, still 57. But gold, I tell you, gold actually surprised me. Oh, see, Bitcoin. Why is Bitcoin down 2.8%? What's going on there?
I don't know. It started showing a bit of life. It started showing a bit of life over the weekend. I mean, structurally looking at it, it looks like it's breaking down a bit. I don't want to sit here and be a sorry, this is sterling. No, that's all right. We can very quickly go to Bitcoin. So that's the hourly. But if we just jump to the daily, whoops, not like that, because that'll make people's eyes go funny. Structurally, that's a pretty weak chart. It's looking to test those supports. So again, it just looks like at the minute there's just a bit of a lack of a catalyst because it's been.
So it is on technicals.
Yeah, I just think looking at the nice round numbers here at sort of 108,000, look, if we just read across, it's a nice big level. So 108 looks like big support. It's
yeah, 108 is the level that people have been talking about since early last week.
Yeah, so
surprised it went straight there. There's absolutely no reason for.
Well, if we actually look, I mean, look, that first big sell-off was on the tariff Friday. Mm-hmm. That was a big sort of negative candle down, and then now it's a bit of a lack of a catalyst, right? Look at the gold price, that's just forging ahead. Silver had that random sell-off on.
Yeah, but if you look down the futures, there's nothing else having any kind of move.
I agree. I completely agree. So I'm not disputing that.
Ethereum the same, 3,900.
Yeah.
Anyway, that's the standout mover of the morning. We also had a lot of weakness in that B&M, so we were watching that closely yesterday. But as we said, the long funds, sometimes they just puke it, don't they? As soon as there's any accounting query, they ask questions later, and they just hit that red button, don't they?
Yeah.
Yeah, look at that. So that is that's the last few weeks. But let's
it's basically had 4 profit warnings this year.
Well, yeah, we thought 3 yesterday, but this was the 4th.
I guess this is arguably the 4th again, yeah.
So there was absolutely no let up yesterday. Let's take it into the 10-minute chart. There you go. Just that is long fund selling, isn't it?
Yeah. Yeah, that's systematic. And this was some of the discussion that we were having on the Discord yesterday, is that when you get continued strategy-based or warnings around the business, that's when funds go, okay, fine, let's just lighten the load. But then, I mean, as you mentioned on the show yesterday morning, when you have a £7 million accounting error turns into a £40 million hole and the CFO goes, even at the very minimum, that's even more question marks. And as you say, it will be a case of very much, shoot first.
So that is the exact quote this morning from, now which research house? Yeah, Clive Black, a retail analyst at Shore Capital, described the update as a shocker. Thanks, Clive.
Yeah.
And everybody's scratching their heads about the disparity between 40 million guidance cut and 7 million in misplaced freight costs. So Clive thinks that the forensic piece becomes all the more important because what on earth has been going on?
Yeah,
So
don't disagree.
yeah, that's it's tricky, isn't it? And it also points out that the new CEO, Geert Jengen, how do you pronounce that? Geert Jengen. He's bought £1 million sterling worth of stock in the last 6 months since he joined. I think the stock's down 48%.
I think you kind of have to do. What an average move. I mean, again, I did see some of the argument for him being the kind of savior of the company. Okay, he's worked for Tesco's, but also for Woolworths, which has not done particularly well last time. So, yeah, I think the problem is in the world of the discounters, and these are aggressive discounters.
Yeah,
you have to get volume and margins so spot on that if you just have the wrong mix of products and that kind of stuff for just one season, summer you might have the wrong mix of products, whatever it is, you just get one wrong product mix. I mean, if you go around these shops and you just go, how do they do it for that price? Right, so your margins are, wafer thin.
Talking about that, I went on to Uber this morning. So basically, I get an Uber once a week and get the tube 4 days a week, right? So I went on just to have a look at it this morning. Normally, it ranges between £16 for an Uber X and 34 for an exec, right?
Okay.
This morning, £10 for an Uber X and 15 for an exec.
Interesting.
I mean, it cost me, what, £5.90 to get the tube?
Yeah,
so
weird, isn't it?
Very strange. And even more interesting, so I told the driver, and the driver went, well, I don't know what's happened there because I get paid 19. So Uber have taken a £3.10 loss on my journey into work. I'll do that every morning.
I was going to say, absolutely, yeah. And the stock trades 24/7 or 24/5.
Yeah, exactly. Yeah. Right, another stock we were talking about this time yesterday was Whitbread. Yes, Whitbread had an absolutely beautiful day yesterday. So that was the direct opposite of B&M. So remember, we missed it at the open at £29. So where's the Monday? Yeah, we missed it there at 29 and 29.10, but I eventually pulled the trigger at 29.31.
Yeah, nice.
And that was at 1 o'clock in the afternoon, and it had a real move higher. So it does look like they're being more aggressive on the buyback, as they suggested they could be to Deutsche Bank at last week's meeting. And yes, certainly retracing some of the losses from that, but still a bit to go.
It is also as well, it's a bit like Viking Therapeutics. When the stock sells off on the news, and again, this is not kind of, stealing my own thunder from later on, but you don't have to buy the headline. You can wait for price formation.
Yeah.
And then once it starts showing signs of life, then you can buy.
Well, that's right, because look at the first day of the warning was Thursday, and that's exactly like B&M.
Yeah, exactly right.
Like you say, you just find that bottoming. And if B&M's down again today, then maybe, is that the same?
Yeah,
same kind
listen,
of
it could well. I mean, if you watch B&M, it does have multi-days of weakness, and then it finds a level, because we can't predict the level. And this is where I understand anti-chartists saying, well, it's just a chart. But at the end of the day, it won't show you on the day where the bottoming takes place.
Yeah.
But it will show you, obviously, in the rearview mirror, and that just gives you the confidence once it starts going back up. And it's the old more buyers than sellers adage, Why is the stock down? More sellers than buyers, You don't need a chart to say that.
Well, what about more borrowing than saving? So we go to the UK numbers this morning, and there we have it, £20.2 billion for the month of September. It was the expectation. It was 20.5 was the expectation. So
exactly. Sterling's actually rallied. I mean, sterling is at kind of multi-week lows, but it has rallied this morning. So, yeah, I've got sterling up here just if anybody wants to have a quick look. There it is there. Look, that came out and it's rallied. Level? So, yeah, that's the 15-minute chart on sterling. So that's only the last
what's the actual level? Because it's...
Sorry, 133.86. So it's been kind of 134 for a while now, or it's 134 something. So it's just dropped below that. So yeah, on things like this, the market, I mean, again, all the projections have been pretty negative. So the market's Classic travel and arrive price action.
Yes. Now what else have we got today? We've got Canadian inflation. So will that be of interest? Will that give us any kind of guide on their North American counterparts? So let's have a look at the expectations there. It's for a year-on-year figure of 2.3% and the month-on-month of negative 0.1. So, you know, to be honest, I've never looked at Canadian inflation in my life before, but
No.
times
when straws need to be clutched. But there is September CPI coming out on Friday.
can't wait.
The delayed one, and then you got the flash PMI for October as well out on Friday for manufacturing and services. So there's a little something. So, I mean, as we were talking on the outside in the office this morning about the misleading headline about the chances of a shutdown ending.
Well, let's get into that. So Hassett, I must admit, not one of my favourite politicians to listen to. Besant, I could listen to Besant all day, but Hassett, he just comes across as a very, what was the little sniffly guy, the British politician that stabbed Boris in the back? Michael Gove. Yeah. This Hassett
Tory
is the
boy.
Michael Gove.
Harry Enfield's Tory boy.
Yeah. So yeah, what did he say yesterday that got people all excited?
Well, so the headline was he was intimating that the shutdown could end this week. But then when you actually drill down into the article or listen to CNBC as well as we did this morning, it's very much in the detail where I think the market jump yesterday in the US was just a lack of bad news, and then that rare earth deal, which we can look at as well shortly. But yeah, he's intimating that the shutdown could end soon. But also, yeah, I mean, look at that headline. You look at that and go, oh, great. But then this is the classic.
Let's take what he said
tactic,
and then leave out the parts that were completely just trying to talk his book.
Yeah, that's
trying to
classic political book talking as well. Look, you know, in the middle of a shutdown, each side is right as far as they're concerned, and
well,
he just happened to
blame the Democrats.
Exactly, and he just happened to be on camera the same day as the market went up. So CNBC are doing a little bit of kind of artistry with the headline.
Well, no, it was. I mean, that was the driver of the late afternoon rally when that.
No, absolutely, and that's what I mean is that comes out, but again, it's slightly artistic license by CNBC where headlines versus.
But nobody reads the details of stories.
Well, because
they just buy it.
This is why as well. If you have a Bloomberg terminal, every headline has a star before it because that helps machine reading algos know it's a headline.
Right. Yeah, doesn't surprise me. So there you go. Yeah, that's Terence exactly spot on. Our studio today, Terence and Dom in the back with producer Phil. Terence saying they literally take it as fact, just from a headline.
Well, again,
so people now think that the shutdown will end this week.
Well, at the moment they do. If they actually take their time and do their homework, as we've done, like good boys, then they'll realise it's just more political
posturing.
Absolutely, yeah, political posturing. Anyway, if that little headline run through isn't worth a like and subscribe, then I don't know what.
I'm even going to give us a like for that one.
Absolutely, yeah, let's get that. Absolutely, like ourselves.
Talking about liking things, Terence has now watched the full series 3 of The Democrat, The Diplomat. The Diplomat is a wonderful TV series on Netflix.
Is it good? I watched series 1, but I haven't seen subsequent.
Massively recommend it.
Really, yeah.
Yeah. And
is it sort of House of Cards-y type vibe? No, says Terence. Political drama, okay. More political drama.
But okay, also, House of Cards, I think you've got to be into politics. Whereas this is more of a sort of a broader, could be on ITV, you know.
Oh right, okay, one of these ones. Okay, yeah, fine. Yeah, good. Okay, well that's something to watch then for the winter.
Right, what else have we got this morning, Scotty?
Aussie rare earths.
Japan. Have we got a slide to show overnight moves there, guys? Oh, you forgot. Producer Phil forgot that was his new thing. Every morning we're going to show you the Asian moves. So the Nikkei, the Hang Seng, and of course our domestic China. Mm-hmm. Shall we put South Korea in there? Yeah, I guess.
Well, we should do. It's been up 6 days straight, and it's a big chip tech. So yeah, it's worth it. Yeah. I'm not sure about North Korea, but South Korea definitely should go up. And Taiwan as well for Taiwan Semi, which, as we know, is a large part of the emerging market ETF, which if you've been watching The Art of Investing, you will also know.
Here we go. Scotty doing our marketing for us.
Absolutely, absolutely. Yeah, interesting on the Nikkei, actually, now down on the day. It's quite a big reversal.
Well, it's a big reversal, because the story there, of course, is Takachi managed to get her coalition government. So let's have a look at the way that the Nikkei has taken that. Of course, a very strong day yesterday. So let's do 30-minute chart, and you can see it has had a strong 3 days. But this morning at 4:30 in the morning, then we're just getting that bit of a reversal there, Scotty, aren't we?
Yeah, we are, yeah. And the chart, I mean, again, that could be, so the China data was a bit mixed today. So actually Hang Seng Tech has been quite interesting as well, which I've got is, I mean, it's very gappy. If we just move to the daily just before we bring it up. But yeah, I mean, so Hang Seng Tech had a massive reversal back higher a couple of days ago. It generally follows.
Got that one now?
Yeah, I do. I have it up. Just if we can switch to my screen, if possible. So that's the Hang Seng Tech. As you can see, it had a big dip below the 50-day, but then suddenly had a reversal out of nowhere. We did make the point this was the first kind of the tech indices that really sold off. But again, the nature of the investors in mainland China are absolute inveterate gamblers. So again, it's had a big reversal, which seemed to trigger yesterday morning's US tech reversal a bit with sentiment and then the news flow. So generally the tail wags the dog as regards the US will drive it, but you can see Hong Kong tech's had a decent follow-up rebound again. So that's quite an interesting one. It bounced off the 50-day.
And then the yen.
Let's have a look at the yen.
Yen as well.
Right.
Yen weakening overnight against the dollar on that news from Japan.
Yeah, that makes sense. Now she has the coalition and she's in government. They are expecting a weaker yen, right? That's the crux of her approach.
Yeah,
will lead to a weaker yen. So, and there's a lot of room to go. You know, 160 at the start of this year. Well, 157, 158 at the start of this year. There's still room to go.
So let's have a look at the front page of the Financial Times then. We've got that headline, UK borrowing hits 5-year high. We've got Rachel Reeves launches a blitz on red tape in bid to save $6 billion a year for UK business. Big positive there. Sarkozy's gone to jail. What's he done? Or what's he been caught for, should I say?
What's he been? Yeah, no, what's he been?
I don't want a long list.
Okay, yeah, exactly. Yeah, have you got time? Have you got half hour to go through the rap sheet?
And then, we got that story on Japan. So, that's...
And then the Times have got strong Apple iPhone sales. Apple up 4 yesterday. That's a
so this was the real driver of the market, wasn't it?
Yeah, absolutely. So, Apple was the big jump there. It's actually funny how sceptical people are of Apple. As we were talking the other day, every time they have a new product launch, stock sells off. Yeah. And then you look at it a month later and it's up 10%. It's just one of those stocks.
Isn't it? So that was a new all-time high. $3.9 trillion. So, of course, that'll be the headline tomorrow.
Yeah, it's now second biggest after Nvidia again. Back to being second biggest after Nvidia.
Yeah, Microsoft's been finding it tough, actually. And then, front page of the Times as well. There is a story on a suspected Ponzi scheme ran for 8 months despite... and this just reminds me, just beware. If any of you are subscribing to Pierce's Substack or his TikTok, there are a couple of people getting messages like, do you want to do a one-on-one session for £820?
Yeah. Oh, really?
A one-on-one session. And
that is Pierce, though, isn't it?
Yeah.
That's not the...
there's no
That's not the phishing.
there.
There's no scammer there.
So please do not give out any phone numbers, any emails, any private detail. There's nothing there. He doesn't contact people. We have it on TikTok all the time.
Exactly.
So I've told the story a few times. Actually, it was when we were there, wasn't it? When the guy walked up and he was going to hit me.
Oh, yes. Yes, I do remember that. Yeah, exactly. Are you Rich McDonald?
Yeah.
Well, you... And then you explained to him how scammers work, and he was like...
Well, no, it's you.
I think it was quite crestfallen. He's just like, but it's got your picture on it.
Yeah.
Yeah, that can happen.
So Ponzi scheme. This was a group selling debt contracts. So FCA. I think they're quite a big hiring fees at the moment. So to try and stop this kind of thing happening, aren't they, Scotty?
Seem to be.
So 79th Group was the name of the company. Owes thousands of people more than 200 million sterling. One of the largest Ponzi schemes in British history.
Crikey. So what were they doing? Selling like yield, basically, saying, hey, if you buy these debts, you'll earn a load of money.
No, they had something in a 250 million pound holiday park in North Wales. And so the debt was secured against that. Is that Butlins?
Could be.
Is there a 250 million pound holiday park in North Wales?
I mean, I'm sure there are holiday parks in North Wales because it's a very beautiful part of the world. However, a 250 million pound one, who knows? Yeah. Who knows?
Colwyn Bay, fantastic. Right, it is 7:56. We got a couple of minutes
already.
Break now before we go in. Let me just check. Yeah, we've got some more things. Zions Bank Corp is up 3% after hours. Okay, Zions Bank Corp. Remember that was the one. So again, we got through.
There was a bit more M&A chatter in that space. I haven't seen the headlines. We can try to get it because if you remember after SVB, 3 years ago, whatever, they ended up being swallowed up. Was it JP who bought SVB for?
Yes.
5 pence or something, whatever it was.
Yeah.
So yeah, there was a little bit of that as well. So yeah, it looks like the spectre of that for the minute. Although again, there's a couple more of the regional banks reporting again today in the US post-close. Again, I'm not forecasting anything's going to happen there, but just to be aware, people out there.
And then I noticed Funky Gibbon mentioned Pinsana had a bad day yesterday. It did, didn't it? There was a US-Australia critical minerals pact overnight. So I just wonder if that took some of the steam out of Pinsana, because of course Pinsana, British company mining in Angola. If the US is doing deals with Australia, is it now less likely to do a deal with Pinsana?
I suppose this is again, as you explained beautifully on the Art of Investing, about how long a mine will take from shovel to production. If you're sort of in the food chain there versus let's buy something that's sort of off the shelf, then yeah.
Right, break. We'll see you shortly. See you at 7:59. Go make your cup of tea. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals.
And I've seen at first hand the power of the wealth creation that one has been able to obtain from this industry. What we're going to do is we're going to put it into action by creating our own model portfolio.
We're going to be talking about the big indices that are around the world, because that is probably some of the safest ways for you to invest your money.
We need to bring this to everybody and help them then take control of their own investment story.
Join me, Rich McDonald, and my co-hosts Mark Spice Holden and Chris CJ Fellingham every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. Right, what are we watching this morning then, Scotty B?
Well, I guess we're going to look at BME, aren't we? That was the That was red hot on the Discord yesterday.
Red hot, the
Anyway,
hot.
without any more ado, because I did make the comment to Rich yesterday that the bell was a little quiet from Chris. I think he obviously lives a very elite life and just has to tinkle for the butler. So
yeah, exactly.
So we tried to go for a bit more of an aggressive. So hopefully that comes through on screen. Okay.
Right, let's see where we sit then on this open. Antofagasta small down, as is Glencore, but let's update. HSBC up 1.8.
It's quite interesting, isn't it?
And Standard Chartered up 1. Barclays. So the banks are the winners to start with. Rio Tinto. I haven't seen why Rio Tinto's up strong. Is that the rare earths?
Oh yeah, I mean all the Aussie rare earths are up, so that probably just drags the sector up a touch, does it? I would
I
guess.
don't know if they've got rare earths. No,
I don't know if they had, but it's one of those things whereby sometimes 1 + 1 can equal 3.
Yeah, because iron ore hasn't moved, so I'm not sure why Rio's is up there. Yeah, Lloyd's up as well, so that's a strong showing from the banking sector this morning. BP recovering 413. Is there some? I don't know what I think of oil just now. There's 1 million barrels in the water somewhere apparently at the moment. That's
Okay.
everybody's been waiting for.
Sound great.
Not in the water.
Oh,
on the water.
Goodness me, I was going to say, eco disaster.
So yeah, BP 413.
Oil just looks like one of those ones where now it's dipped below 60. It's probably just kind of stabilising a bit.
Yeah.
I mean, in the bank since I mean, if we just kind of look at HSBC on the daily.
Yeah, why is that so strong?
Well, if you actually look, it hasn't really recovered. Look, from that weakness of the regional banks in the US, and then a bit of the China stuff was, you know, a little bit slow. I mean, that's got, again, we can have a quick look at. Whoops, crikey, what's happened there? Sorry, there we go.
This was along with BNP. BNP got.
Yeah, so let's look at Barclays again. They've all got ground to make up, right?
Right, while Scotty's looking at that, we'll go through the losers this morning. The losers are Antofagasta. Again, don't know why we're seeing strength in Rios, but weakness in Antos. AstraZeneca down 80 basis points. Burberry with a brand new advert.
Yeah.
It's fascinating.
I haven't seen it, but you were telling me about it this morning.
Yeah, we'll try and get that new Burberry. But basically, the new strategy in marketing is that Burberry isn't just for special occasions. It's for everyday occurrences like going in and ordering fish and chips. So we've got a couple of American influencers walk into a fish and chip shop and trying to choose.
I mean, that sounds like the opening line of a joke, doesn't it?
Yeah. So Burberry there down 70 bips. You got WPP, Unilever down just a boring but annoying 0.5%. Diageo, I sold my Diageo yesterday. That had sort of taken in a nice 350 quid. So I thought, right, I'll just
happy days.
Take that one. What else? Yeah, that's it really. Everything else unchanged. So let's go to B&M, shall we?
Why not?
Have you got the graph there you were looking for first, Scotty?
I was just looking. I started looking at the French banks. I'd seen BNP got absolutely clattered this morning, but that's recovering a little bit. I've looked on the wonderful IG platform for news. There doesn't seem to be anything fresh today, but that's had a bit of a clattering this morning. There was some stuff about Sudanese litigation yesterday because obviously they are big African lenders, but I know
that was yesterday's move.
Was it yesterday?
Yeah, down 7% yesterday.
Oh, down right.
So
sorry,
I think
that's
you're on the year chart, aren't you?
I'm on the daily there. So yeah, it's showing down one. Yeah, I must have. I think I was having a little bit, as they say in market parlance, a brain fart. So
I only saw it was down 7% yesterday because I was long the European bank.
That would make that would make sense. That's not refreshing because it's on a 5-minute. Okay, ignore me because that's utter nonsense by me as usual.
Right, let's have a look at B&M then. So B&M, what does B&M stand for? Because I'm getting bored of it saying B&M.
B&M.
It's like, who would have the company with 2 initials?
Yeah, exactly. Yeah, I don't know. It's probably. I think it's an old I think this is quite an old retailer name that's been bought up, and they've just kind of hung on to the name. It must be a couple of family names, right, or something. It should be snappier. Audi, Lidl. It's got to be 4 letters, right?
Billington and Mayman.
Billington, there we go.
I think it's time to do a name change.
Yeah, it's overdue a name change.
After the disgraceful 4 profit warnings this year. So the stock is up. Well, it was up. It's up 0.5% now. Let's see how long. Is there any stock still around from yesterday? What's happened, of course, is the long funds have sold, right? So that's stable hands, and you're putting the stock into relatively more short-term hands.
Yes.
So it's fine as long as it stays higher in the day. If this starts to trade down back towards 165, I don't know.
So the issue there is, as we look, if we can look at my chart, this is a very kind of ultra longish term one. This is about 18 months. We can see here at the bottom, you've got earnings here. The stock sold off. This is at the far left. Earnings, stock sells off. Earnings, stock sells off. You had a trading update on the 7th. Stock sold off, rallied, but it's come back down again, and now you've had this. So this is one of those ones where I'm sure there's got to be structural value in it, but this is very much, as Rich was kind of making the point on Whitbread earlier on, that this is one not to try to pick a level on unless you just...
That's exactly what I'm just trying to do just now. So if we go back to my screen there, I'm going in at 165.5. So 165.5. I'm going to make a first print, 4,000 shares, and that's just because, well, it's, as we said yesterday, Whitbread had that bad day.
It's when you watch it, sometimes you do have to just sit, and it's a bit like watching paint dry. Yeah. But as you're coming into the close, this is when the convergence of the orders are going to start coming in, and 165 was definitely being defended yesterday on the order book. That means nothing in singularity. Mm-hmm. But what it does do is you sometimes do just have to sit back and watch the price action. It's quite reflexive. It's hard not to, but it's often the best way to watch what levels are getting defended aggressively. Yeah.
But that's, as I say, that's the first print. So 4,000 shares are in to buy at 165.5 in, what are we going to call it?
Blame.
Yeah, the blame game. CFO
blame.
Gone.
Yeah, exactly, yeah.
Right, what else then? So we looked at some European names. Let's look at the rest of them. The big winner is SocGen, bouncing Rheinmetall, as you
Rheinmetall again, yeah.
What else is there, Scotty?
See, Caring having a rebound. Luxury is having a very quiet little rebound, isn't it? In the last few days, I've even seen a couple of headlines in press saying, Luxury is back. I don't know if it's because as you're coming into Q4. Festive season, some people still spend silly money on.
Is Byrne going to be getting a Burberry scarf?
It might be. I might go into B&M for a scarf and just write Burberry on it. That's about the closest we're going to be getting.
Burberry.
Yeah, brum brum. Yeah.
Right, Stellantis back after it had that sell off last week. So 916 there. Porsche 43. Not much else there. It's a bit of a dull day, actually. BNP Paribas down again, 1.2%. Air France down. L'Oreal after that purchase yesterday of Creed Aventus. ASML touched 900 euros yesterday.
Oh, is that the Creed Aventus convo that you had with Chris yesterday?
Yes, you know Creed Aventus.
I'm not allowed near my son's wardrobe. He's got a shelf in his wardrobe it's not an aftershave boutique.
Right.
And Creed Aventus is one of those, and he literally, until last year, he used to spray it on going to school in the car, and it literally make my eyes water. Him and his mates they literally all smell like as if they're about to go on a lad's holiday, like just.
Well, the lad's holiday is up to Nottingham soon, isn't it? He's off up there. He is
Halloween in Nottingham. I don't know. Yeah, he's got a couple of friends at Nottingham Uni, and apparently they've got a club that holds 5,000 people in Nottingham.
I think that's where I had my 21st.
It could well be, yeah. So there's some vast nights up there. So he's going to stay with a couple of mates up there at the end of the month. So yeah.
It's actually also where we watched Steve Redgrave win the Sydney Olympics. They stopped the nightclub when Redgrave and Pinsent were on, and they
nice. I love it.
Fun. Right, before we move on to guess the chart then, I was watching CNBC last night and they've stolen our idea. They had a mystery chart last night.
Oh, come on.
So-
Copywriting.
Yeah, exactly.
Where's the IG lawyer? Where's the IG lawyer? Exactly, yeah.
Have a word.
Yeah, if they have a technically speaking section tomorrow with a bald bloke boring people for 15 minutes, then you know that we're going to have them bang to rights.
Scotty, I can't wait. I have to phone Natalia and get her to watch.
Yeah, absolutely, yeah.
Okay, we've got the currencies there for you. The sterling is actually down 13 bips now, 133.86. You've got the yen, as we said, 151. And yeah, they still haven't got euro dollar on there. Brilliant. And then the commodities still haven't got.
If it helps euro dollars at 116, that's small down. I can help to close any gaps in the coverage just until.
Silver down 1.5%. Copper down 1%. God, yeah, these. Yeah, Terence asking, where's my gold? Ask Luke Moore, Terence. You write a message to Luke Moore because he promised me last week we would have gold on the major commodities page.
Poor Luke.
On our platform.
Gold! Not here to defend himself.
What's gold doing? See, it's obviously not a major
down,
commodity.
50 bips down.
It's an Irish.
4 tree, exactly.
An Irish morning on gold there.
Absolutely.
Welcome to Guess the Chart. Oh, hang on. Neil Brewster just popping something in the chat on SWC there after a 25% rally yesterday.
Sighs of relief in the gallery there.
Right, they've bought 10 Bitcoin, so they've now got 2,660. Where have they got the money for that? Maybe you had it down the back of the sofa.
Absolutely, you never know.
82,000, so that's 111,000 they paid per Bitcoin. So they're down on their average Bitcoin as well. And yeah, so that takes them to 2.6. Where are we trading now, I hear you ask, on the NAV? Well, I think that at where are they? They're £1. I wish they were £1. 65 pence to 75 pence, so a wide spread there. On the bid, they're at 0.85 times NAV.
Okay.
So they're trading at a 15% discount to their Bitcoin holding. On the offer at 75 pence, that's roughly about the value of the Bitcoin.
Makes sense.
So there was a 1 million raise yesterday.
Yeah, I think Andrew just put that on there as well. Sounds like Andrew's next up for a spot on the show.
Oh yes, that would be welcome. There we go. So gross proceeds from the placing of the subscription shares equivalent to 89 pence per share. Sorry, is this his ATM? According to the terms of the subscription agreement. Yeah, this must be his ATM that he sells in the market when it's up.
Okay.
I assume he's not selling down here, but yeah, that 89 pence would make more sense. So that's where he's got his money for his 10 Bitcoin.
There you go.
Good. Right, Scotty, you ready for this?
I am. I just need to just check my vocal cords. So we're just going to do a quick guess the charts, just while I warm up. La 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 la. European stock being told.
European stock. Well, if it's
I'm not going to get it.
I'm
not going to get it, so I'm not going to bother looking. But yeah, it's European apparently.
Good stuff. And then I will be back on at 8:30 with Julian Wheeler. So enjoy your technically speaking. See you in. Well, I'll see you in 15. Scotty, I'll see you in 2.
Wake up, traders, time to start. We're zooming in on lines and art. Candles dancing red and green. Is it crypto?
Welcome back, everybody. Thank you for tuning in. The chart of the day was Heineken, which I must admit nobody got. We had one guest for caring. Either the excitement about this segment is such that people couldn't possibly focus, but yeah, that looks like Heineken is not refreshing the parts other beers can reach at the moment. But yeah, Heineken is our chart of the day. So this segment as a bit of an explanation for people. I've been looking at the Discord now for about 3 months, thanks to Maturin letting me in, and I was just considering some of the things that people are talking about and the topics that that seem to crop up more frequently. So I just thought we'd try to expand on a little bit of that. This won't be a one-off, hopefully, unless we get so much hate for doing it that no one wants to see me again. But hopefully this will just address a few of the questions that seem to crop up on the Discord, and try and just to address a few of those in how I think it should be done. Again, I am not a world expert on this. I'm not saying you have to do it this way, but this is what makes sense to me. Over the years, how Rich and I have been taught, adapted to the kind of retail and individual investor world, which the last 18 months I've been in. So hopefully there'll be some value in here for people, which they're going to enjoy. And just very quickly to go to my screen, we're just going to have a little look at the topics. It's what's your time frame, understanding what you're trading, using ATR for risk management, picking levels for entry and exit, and art versus science, or both. So for me, I think the most important thing about knowing what's your time frame is where people might only sometimes look at a daily chart for everything and base things off this. So for the purposes of how I think you should start looking at your selection of the position or looking at an instrument, is on the daily and the hourly, because a lot of the people on the Discord don't seem to scalp. They seem to want to hold positions for a few days, which is great because you can generally get better returns in that way. Again, scalping and intraday trading is absolutely fine, but that's a different strategy, which we can talk about, but this is not going to be the topic for today. So again, this is a majority field where most people seem to want to hold the position for the week or for 1 to 5 days. So I generally look at a daily, which is the anchor for the trend. So we'll actually look at a chart or a couple of charts in a minute, and we're not going to have any indicators on. That can be a separate session if anyone's interested in indicators and how we use them. And then you look at the hourly for the setup, because again, I think if you look at a shorter time frame for the setup, there's a bit too much noise. It can make you reactive, it can make you emotional, which is not the state that we want to be in when we're going to trade. And then for your stop loss and your position taking, this is where we start using ATR, which we'll touch on. Well, actually not touch on, that may take up more than its fair share potentially. So you generally look at 1 to 1.5 times ATR and 2 to 5 times ATR for the measured move higher, i.e. for your profit, but you want to aim for a ratio of a 2 to 1 risk reward. So then when we're talking about your time frame, if we just go back to my charting tool, we're going to look at a simple chart of NVIDIA. As there's no indicators on there. It's nice and simple, but it can still look to tell us a story. So at the moment, I would read from this, the uptrend is intact, but it's just actually faltering a bit up here on the right-hand side, which if we want to expand a little bit on it, we can, to make it easier for people to see. So we can see now it's just faltering. Obviously, it's had the sell-off on the Trump tantrum, or the latest headlines on the tariffs, I should say. The uptrend is still intact, but it's not reacting to earnings as it used to. If we can see earnings here, around about June, the stock had that big run higher. We've had earnings here, the stock's done nothing. So for me, right here, right now, if I was looking at a trade in NVIDIA with the catalyst of earnings not going to be for a few weeks, for me, that is not a stock I want to play. And if we look here at the hourly chart as well, for just a simple, as I said, there's no indicators, but sometimes visually, I like to do things like have a simple rectangle, just as something to watch on a chart. So for me, this range here is holding, but the stock just cannot break out of it. So for me, if I'm looking at NVIDIA, the thing I like about on TradingView, if you're drawing these lines and boxes, you can save it and you can go back to it but visually, I just like a clean, simple chart. You don't need indicators on there. But once you get to a stage where you can start thinking about what is the chart telling me, then I think starting on the daily, which is the upper one, that's the trend. As I say, uptrend intact, faltering a little bit. And then on the hourly, you can see, you can look to drill down a bit more into the price action. And that's the kind of zone I like to draw my boxes in on the shorter time frame, just to tell me if it's breaking out or not. And at the moment, that looks like not. So right here, right now, NVIDIA, yes, we kind of know the story on that. It's not a surprise to people. That needs a breakout and a bit more impetus. Just go back to that. Right, there we go. So we've looked at NVIDIA. As I say, that's simply repeating the setup that I like to look at. Again, you can look to pick your own. But then the next part is, I think for me, is one of the key parts of this slide deck is understanding what you're trading. So just looking across from the top, I don't like to read off slides, but we'll look to skim over some of the topics here. Every stock has a driver at a point in time. And ideally, before you enter into a position, just take a few minutes, try to figure out what it is, find out what the driver is, look at what the chart is telling you, and the drivers can rotate. A hype stock can then become an earnings stock, or then become a value stock as the story matures, as it moves on. And then your edge is, and there's such a lot of talk about edge, that could be a whole episode as well, but basically your edge is your process. It's not your edge in being fastest on the buttons, your edge in thinking that you know something that nobody else does. Your edge is a repeatable edge, which is why having a process for what you're setting up, whatever the process is that makes you happy and suits you and managing your risk, that is your edge. There's no other thing as edge. Edge is such an abstract and poorly used phrase in trading, but your edge is your repeatability and your consistency. In any trading book you read, I mean, I've read so many over the years, that consistency of approach is the key thing. And understanding what you're trading. Are you trading hype stocks? Now, of course, on the Discord, there's a lot of stocks that are moving wildly. We'll look at the charts of a couple of those again a little bit later on in the presentation, but it's just a case of, if you are going to trade a hype stock, which is moving 15 to 20% a day, you wouldn't look to trade that the same as NVIDIA or say a more well-known stock. But then you have your more kind of, standard drivers like your growth stocks, your momentum stocks, your value and mean reversion, which again is something like a B&M perhaps, or a Whitbread. So that's mean reversion, which is, it's cheap for a reason. What are the catalysts and so on and so forth. But just understanding really what you're trading is the key, and managing your risk accordingly. That's the key thing. So if you're using the ATR now, hopefully, thanks to maturing as well, because he mentions this a lot, the ATR is the average true range for the day. Now, generally that's displayed as a 14-day rolling average, but that's how much the stock moves in a day on average for the last 14 days, so almost 3 weeks. And just think of that like the volatility of a stock, but obviously some of the things we're trading in do not have options in them. So some people like to look at implied vol for a stock. But again, once you're getting into the lower end of the market or the more hype stocks, which have less established price patterns, you don't always have options vol and so on. So think of ATR as the volatility of the stock. And this should help you to think about what your sizing should be. So if we just look at 3 stocks I've picked. So the first one is NVIDIA. That's got an ATR. Now that's generally expressed in a value, a numeric value, but I've also flipped that into percentages. $5.82 is the ATR on NVIDIA, so that moves about 3% a day. EEE, which is stock in the UK, that's apparently a rare earths miner that some of the guys were looking at last week. That moves basically 17% a day. And then Defence Holdings, which I know everyone loves looking at, that moves 10% a day. Now, for things like sizing and having some of your processes, for instance, for me personally, if you're thinking about every trade you put on as a percentage of your account size is the maximum size you should be putting on. So let's say if you're lucky enough to have £100,000 in your account at your disposal, the generally accepted wisdom, which I agree with, is 1% of your account size per trade. But you can also adapt that a little bit. So for instance, you could say in stocks that have up to 5% a day ATR move, you could use 1% of your account size, 5 to 10%, 0.75% of your account size, and over 10%, maybe 0.5% of your account size, because you'll still achieve the big returns if you get this right, but you're managing your risk, because risk management, guys, is everything. Someone said to me once that every trade should be a shoulder shrug. You should not be sitting there like the guy at the casino with sweaty palms and thinking, right, this is the one, I need this. If you've had a bad month, you've had a bad month. And again, we are supposed to be speaking with Esau tomorrow about the psychology of trading. This really marries up into it. About every trade should be a shoulder shrug. You should treat everyone as you can, exactly the same, and not having it as an essential part of your day, or this is the trade of your week, your month, your day. Just try and manage around that as best you can. So again, just looking to pick your levels, and if you're using ATR every time and you're looking to pick your levels from that, again, I'm not saying you have to use this, but you've got to try to be a bit more systematic, because otherwise your decision-making processes and your selection around levels just is all over the place and you can't stay in control. So let's say if you enter a stock at 100, 1.5 times the ATR should be your stop loss. And of course, that will change for every stock you're trading in. Why 1.5 times ATR? Well, you don't want to use a one-day standard move as your stop loss, because you could hit that in a day. But outside of one day, you could use 1.5 times an ATR as your stop loss, because that means that it's an exceptional move. And then again, as we were saying, if you're going to hold a position for a week, you could use from 2 to 5 times. Again, if you want to be a bit wider on your stop, then you want to be a bit wider on your profit take. If you want to be a bit more narrow on your stop and use less than an ATR, you've got to be more narrow on your profit take, but try to aim for the 2 to 1. And then just literally look at the chart, right? If that makes sense, where your stop loss is, does that make sense? Because if you've been trading a stock that's really volatile, but it also holds a level, which hopefully we can look at, if you have your stop loss below a level where there's basically a vacuum, remember, a stop loss is a market orders. Even though your stop loss is, say, 100, that's just where the trigger is, right? Stop losses are market orders. So sometimes you have to do what makes sense as well, which is why having the prep time of just running through this methodology, once you get used to it, you can actually do it pretty quickly. You can set yourselves up a spreadsheet. I've got some spreadsheets I can share with people, which you can input. It selects those really quickly. But again, you don't want to rush into a trade. This is the whole thing about making the trade a shoulder shrug. Just have your process before you get into a trade. If you can, as best you can. I know headlines are exciting and impulsive and you want to jump on them. But again, just really try to be a bit more selective around what we're doing. Okay, we've got last couple of minutes. So again, if there's any of this you want to expand upon, really, really happy to. This is just a quick sort of a taster. Feedback on this is key. So either here in the comments or on the Discord, things you want to talk about. But you've got to be realistic when you're looking at your charts. So I've had here as final example is Oracle, but let's use that. Unfortunately, I've not been able to look at the EEE chart and the ALRT chart, but we can look at that later in the Discord or at another time. But basically, if we look at Oracle, because this is a great example of hype and growth. So Oracle, it's been unloved. You've got these new stories around there. It's making money out of AI, but it's also in a really weird kind of situation chart-wise, where if we look at this, it's had this jump higher, as we can see on the top chart. But it's also now really struggling to break out of the box that it's in, and you've got clear water below. And I was looking at this on Friday as a potential entry point. And if we use 1.5 times ATR, it's realistic, but if you look at the red line on that lower graph, that takes you to that shadow low or the wick low. So this is what I mean about you've got to be realistic when you're looking at these levels when playing a stock, because if you have a market order, just right on that low point there of that wick that you can hopefully see with the cursor, that's going to become a market order, and you've got clear water below for quite a long way. So again, Oracle, if you're looking at that chart, again, using the same sort of methodology of how I would see this, okay, it's had the break higher on the news announcement. Shout out to Piers as well, because this is one he does not like, and it's based upon the price action. So yes, it's making some money from AI. It had a jump again, or a run up, saying yes, for the purchases it's made, it's expecting to make in this, that and the other. The price action is telling you that the market is still skeptical. And this is a really dangerous island breakout for all you chartists out there, which is not normally over multi-days, but we can see it's in an island. So I would want to see a break either below that big range here or above. But right here, right now, as an example in Oracle, if it's one you want to play, me personally, I wouldn't touch it, because using the levels that it closed at on Friday, for instance, my stop would be outside that swing low here, which is really dangerous. The profit target looks okay, it's reasonable, but again, it's getting back towards the top of the range. And this is what I'm talking about, where you want to be realistic. And this is the combination of art and science, where it's fine to use ATR every time and have your methodology, but you've got to be realistic and look at levels where the price action holds and so on and so forth. So hopefully that was a quick intro into some of my thinking. If there's anything more you want to touch on, anything else you want to touch on, as I say, feedback on the comments is great. And that was a quick segment and an intro into some of the things that we're looking at. And again, happy to expand on this. This is a series we'd like to do for everybody, or things to expand on. So again, feedback is key on this. We'd love to hear more from you about what you want from us. And now you stay tuned for Julian, one of the highlights of the week, where he's going to talk about several things for this reporting season as well. Other things going on, which is going to be key, and he is someone worth listening to. So we'll be back shortly.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to The Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday, when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Yeah. Excellent. Welcome back, everybody. It's Julian Wheeler here with me to discuss all things, well, that have been in the news for the last couple of weeks, because we've got plenty to talk about.
We got a lot to talk about, yeah. So last time I was on, it was just the day before, and I said nothing's happening, nothing's untoward.
Yeah. What could possibly go wrong?
What could possibly go wrong? And I go back to my desk, and about lunchtime that day, this is Wednesday, 2 weeks ago, Jefferies, the investment bank, puts out this announcement that the First Brands bankruptcy that's had already had a little bit of publicity, but not very much.
Yes, but it kind of went by without us really focusing.
I mean, companies go bust. This is part of the capital cycle.
Yeah.
But what Jeffrey said was, we've got $714 million exposure in outstanding loans. And you go, right? And then you find out the fund in which is invested, that's 24% of their assets. So people went, Now, Morgan Stanley came out immediately and said, don't worry, loss will be manageable, no problem. The stock didn't really react. That's what happened later in the day. Later in the day, we suddenly found at lunchtime, BlackRock said, we'd like our money out of the fund.
Oh, I didn't know that. Right, let's get the chart up then, guys. So there's Jefferies over the last, that goes back to the
Goes back to the earnings.
7th of October there.
Okay, so that's when we had the dislocation, right? And that was the news that it wasn't so much they were making a loss, but if the Titanic's hit the iceberg, you want first lifeboat. When there's a run on the bank, you want to be at the front of the queue.
Right.
Now, I'm not saying there's a run on the bank here,
No.
but it was the fact that you get a brokerage say, no, don't worry, manageable, but the actual investors say, we'd like out. And the following day, Morgan Stanley Asset Management said, we'd like our money out as well. So suddenly, there was a case.
See, that gets smelly, doesn't it? The fact that Morgan Stanley are saying, fine, by the way, we do have exposure to this.
Yeah, exactly. So what you suddenly realized was that, then it was followed up the following week. Jamie Dimon, CEO of JP Morgan, on his call, he did the old, well, there's always more than one cockroach in the kitchen sort of story.
That's the famous quote of last week, isn't it?
Yeah, that's right.
Yeah.
To which one of the private equity CEOs came back and said, well, I don't know what he's talking about. We're absolutely fine. Maybe he's saying within JP Morgan, there are plenty of cockroaches, dig back. So you've got this very much public versus private trade-off. And they are, after all, competitors. And I think, the market is the ultimate arbiter. If you look at the last 12 months and say Apollo, who are the most exposed to private credit, if you look at the chart of Apollo and say Blackstone, the two biggest, and you compare those to JP Morgan and say Goldman Sachs,
very different story, isn't it?
It is plus 40% to one lot, minus 10 for the other. So the market's saying private equity, there's either a problem or the good times are over, or at least, it's not going to be as good as it was.
Yeah.
And, when you look at a top or a potential top, our government wants us now all to put money in our pensions into private equity. Why not 15 years ago when this was all good?
Yeah.
We're all going to be piled into private equity now. No thanks. You know, I'd have liked to have been in private equity when it had the advantage. Because what's going to happen now is that we're going to roll back the regulations on the Wall Street banks. You're going to see the regulations rolled back and lending standards will be loosened. Because basically, and now coming on to the banks, you've seen that these banks, you know, they're normally their own worst enemies, and they, if they, you know, can find something to trip over, they will find it.
Yeah, they try their hardest.
Yeah, they try their hardest, but they have been prevented since 2008.
Yeah.
The regulations that were put in the wave of the bailout and TARP was so onerous. That's what was the growth of private credit. It stepped in because the banks couldn't lend.
Right. Okay.
And now that's sort of unfair. And from JP Morgan downwards, they've clearly led a charge. And you're going to see, I'm pretty sure that's going to come out probably by the end of the year or early next, there will be far looser lending standards. Tier 1 capital requirements will come down. The whole Basel II, Basel III, I don't know what we're up to now, will be repealed or rolled back, certainly. That's what they're going to do. I'm sure about it. And that's why you're seeing the underperformance of private credit.
Well, I would imagine Zion's Bank could probably do with a little less regulation because, that was one of the victims of last week, I guess.
Well, you see, what Zion's, I mean, this is very interesting. So Zion's reported last night, and having gone to the market last week and said, we have a 50 million, not first brand, something else. Like we've sort of looked through our book and suddenly, oh, there's a 50 million bad loss we think may be fraud. And you sort of wonder, well, why did they say it last week? I mean, how long has this been known about?
Yeah.
Or how long has this been? The coincidence seems too much. However, when Zion's reported last night, their credit losses were totally manageable within the realms of what you'd expect. So the stock, having gone up again, went up again after hours. So, you know, it's exactly the thing. It's not the banks.
Part of the regulations, though, isn't it? Because if these things aren't disclosed immediately, the CEO risks going to jail.
That's right.
So there's no way that they're...
The banks are not going to be, you know, and the market sort of aggressively sold the banks down on this sort of news yesterday. But they're fighting the last war. You know, this would have been the right thing to do 17 years ago. Yeah. But not now. So I think the banks are okay.
Okay. And yeah, certainly the regionals have recovered somewhat.
Yeah, there's going to be a little bit of, you know, show me the money, as it were. I want to see it. But Zion's results last night, slightly wonder why they bothered to make that disclosure. So I can't answer that one. But I mean, why they made a big point of making a disclosure, them and one called Western Alliance Bank. We'll see what they say. But as I say, no, more likely holding the parcel when the bomb goes off is going to be insurance.
When the bomb goes off,
well, it is a parcel.
Metaphors
well,
there.
I have lots of them, but you know, the old pass the parcel, and you don't want to be holding it.
Yeah.
And normally it's good old pension fund insurer who's, you know, at the end of this line and who says, oh yes, I have this, do I? You know, back to Jefferies, their role in all this is the one that's still open to question.
And so Rich Handler spends a lot of time on social media, right? So as the CEO of a bank, should you be commenting on every Instagram post, you know, from these overhead on Wall Street and things like that? Or should you be making sure that one of your funds hasn't got 25% exposure?
I would say so. I mean, at what point is, you know, let's leave aside that anything untoward has happened. But on a risk management basis, you know, if we had a fund within Shard that had 25% exposure to one credit name, we do have a credit fund. Shard Credit Partners we do have. So I'm familiar with private credit because we have one, and it has absolute, you know, 10% is a maximum, and that's a sort of standard rule. Yeah, I think across the industry. So to find this one has 25%, and then you find that they're also arranging the loans. It's I don't know what's the term, shabby. Maybe. You know, anyway, we'll see. So unlike Zion's Bank, which has now got its entire loss back, Jefferies is still trading below the point at which this revelation was made. So we'll see. We'll see.
Yeah. I noticed BNP got absolutely smashed yesterday. Was that something to do with because we know that, you know, their total exposure as a bank, not necessarily to this loan book, but they've got a big balance sheet, don't they?
There's always, every cycle normally brings down one financial institution, at least. You know, Credit Suisse was the last one.
God bless its soul.
There we go. Is it BNP? I don't know. I haven't looked at that. Can't comment. But that, you know, again, what's the market telling you? The market didn't like that.
Yeah.
Didn't like that at all. But even I saw Vietnam. The entire Vietnam stock market dropped over 5% yesterday.
Right.
They said because of credit issues.
Okay.
So we know that when there's easy, cheap money and it's a happy game, it encourages risk-taking.
That's it. And then you have very aggressive rate increases. They stay higher for longer than people think they're going to. And bit by bit, that eats away at these institutions and the credit worthiness.
Well, the credit, they've all been, and then what happens is that more money and more money comes in, right? So they've raised more and more of these funds. So what do you do with this money? You've got to deploy it,
It's forced
right?
it.
I mean, you know, if I give you something, it's not to, you remember the parable, Jesus of the servant who just went and dug a hole and put his in the ground and said, well, I didn't know how to do it. He said, thou wicked and faithless servant, you know, give it to the man who made most. Very capitalist, Jesus, back in the
He was.
Yeah, he was.
Spent 30% of his time talking about finance.
I know he did, you see. So the point is that if you get money, you've got to deploy it, right? You earn fees on it when you deploy it. That's the first thing.
Yeah.
So that slightly pushes you to do something. The first brands thing, if there are more like that, we really do have a problem, because that's where they're saying, look, they've made loans and they use the collateral of invoices to then go and get another loan. So they're double and triple counting.
So in invoice financing, the first time I heard about this was, I think, 2017 or 18. And my friend was offered a job for a US firm that was trying to expand in Europe. The returns were just too good to be true.
Well, there you go.
Absolutely. Like, you know, we were like, how do we invest? But there was a minimum, I think, 250,000 it was to invest in this fund.
If they're too good to be true, they are.
Sooner or later.
Well, you know, it's this is Ponzi 101. You make something attractive to bring in another, and the second person in pays the first, the third pays the second, and so on. This game is as old as finance.
And accounting scandals, fraud, loan book problems, that is late cycle, isn't it?
Always, always. It's when you've had good times, you've made money, and now you go, what do I do next?
Yeah.
Now, what a lot of American companies are doing, which is why the American market continues to go up and why I keep saying you won't have this crash, is most American companies make money and they just buy back their stock.
Yeah.
I mean, they keep retiring across the market about $1 trillion a year. You know, well, that's a pretty good buyer in the market.
Yeah.
So that with retail, who says, buy the dip, buy the dip, buy the dip. I keep saying this is why the market doesn't go down.
Yeah. Right, we're going into results season.
Yes.
I would imagine, I can't imagine anything there putting the market down. We'll probably see tech go higher yet again. But what are you focused on for earnings?
Well, we talked about Netflix a couple of weeks ago. They're tonight.
Yeah.
They'll be good. They should be good. They should be good. But it's not so much about the results, it's about what they're showing. They'll talk about K-pop Demon Hunters.
Yes, of course. Now, this...
So, well, Funko's been a disaster for now. There are various reasons. I know. I have to own up to the bad one at the moment.
Well, but we looked at it, wasn't it? And it's because it's not even coming out.
It's not coming out this side of Christmas, and that's the problem.
Oh, is it now this side of Christmas?
Yeah, and that's why the stock's gone back down.
All right, okay.
But we still think with the stock here at $3, it's trading as if it's going bust. Mm-hmm. And I don't think it will go bust because I think they will not allow it to go bust. I think Netflix won't buy it, but they've got a Netflix man in there. They do not want this thing to go down.
So that's something to watch on tonight's call. But what about numbers coming up in the next week or two?
Right. Well, we've got Tesla this week. Can't comment on that. Intel will be more interesting on Thursday.
A real stock.
Now, I've talked about Intel before with you a few months ago. The US government's invested. The stock has moved massively.
Yeah.
It's 50% up since the US government put its money in. So we have to, and they're not going to have spectacular earnings, right?
No, nothing's changed.
I would be, personally, I'd be taking profits on that.
Yeah.
Because the risk reward at 38, if you were in the low 20s or something, right, you've made a huge move. So it'll be about what we have, what's progress, what's coming. And I can't see that they can do enough to take the stock up versus what might put the stock back down. Now, if it goes back down to, say, low 30s.
Yeah, 32s.
Yeah, something like that, a big buyer. For long term, Intel's back in the game.
Yeah.
It really is back in the game. And the real kicker could come. This is one of my worries. I've got 3 worries in the market. One of them is obviously the China and Trump trade deal, which goes backwards and forwards, and but it's always there as an overhang.
Are we getting a resolution this week?
Well, we're supposed to, but I mean, do we? I've no idea. I mean, your guess is as good as mine. But here's what's the worry. It's a plus for Intel and a negative for TSMC. Trump said that part of the thing they'd be discussing would be Taiwan sovereignty.
Wow.
He said that to reporters. I don't know why the market didn't pick up on this. Yesterday, when he was talking to the Daily Reporter thing, and he said, yeah, I don't like what they're doing with fentanyl, don't like what they're doing with rare earth, playing the rare earth game with us. But off that soundbite, he also said, yeah, I'm sure the subject of Taiwan will come up.
Right, okay.
Well, if he says anything that is negative for Taiwan, that's not good.
Yeah.
That's not very good. Just for the market perception, I'm just saying. But anything that's negative for Taiwan is probably positive for Intel.
Yeah, but there's nothing that can be said there. There's no way that Xi and Trump could ever have a discussion that has a solution on that.
No, what the Chinese want is they want the American wording of their recognition of Taiwan changed. It's something like, at the moment, they recognize the fact that they are an independent state, or they don't wish to. There's a certain wording that's currently used under US standard policy, and he wants to change it to something that's, shall we say, more negative.
Right, okay. And less in
favor.
Defend them.
Yes. Yeah. And if the market decided that that was for real, there's going to be a problem.
Yeah.
So other earnings. Sorry, I wanted to talk about one that's
there's Alcoa numbers tomorrow night. You've got some thoughts on Alcoa, but not necessarily
not the earnings.
For the earnings, yeah.
No. Okay. Alcoa is my new sort of stealth AI play.
Oh, right. Okay.
Okay. Because look, metals have been up everywhere.
Yeah.
All the precious metals are through the roof. Alcoa is the old original, was a member of the Dow Jones, aluminium. Aluminium's been in a bad place. 2 main drivers of aluminium demand: auto, so cars, and planes. Right. Now, as you know, Boeing haven't been making as many planes as they should. So that's not very good. Mm-hmm. Airbus are maxed out, so they can't get any growth there. And cars have been terrible. I mean, look at the German car companies. They've been absolutely shocking.
Yeah.
So the demand picture isn't great. And Alcoa's numbers, they're only going to make probably a couple of cents earnings tomorrow. Okay, so we really aren't in this for the earnings. No. What we're in it for is an asset play.
Okay.
Here's what happens. Alcoa has built up, obviously, over time, its plants. It's been in business for, since aluminium started. Right? And back in the 1940s, 50s, 60s was when they were really expanding. They built plants all over.
Be busy then.
They're busy. So what they've now done is they've decommissioned quite a lot of sites.
Okay.
One of which is in Australia.
Right.
Major one. And if you can, I don't know if you can show me. There we go.
Almost as if we planned.
Almost as if we by magic. Right. You're looking at Melbourne there.
Beautiful. Have you been?
I have been to Melbourne, and I went just before they hosted the Commonwealth Games there.
Ah, nice.
A friend of mine was part of the team and show. She was working, so I stayed with her on that harbour, about just below the M of Melbourne. There is where I was staying. Yeah. So Melbourne's in the top right-hand corner, as you see. There you go. But I don't want you to look at Melbourne. I want you to now come down the coast and look at Geelong. There we go. Now Geelong, you see, is basically a suburb of Melbourne. Nice coastal bit. Now then. The bit that matters is that little horn bit sticking up right in the middle there, called Point Henry. Okay. There we go. And we zoom in there. Boom. Now, how about that for a little beach frontage real estate?
Beautiful.
Lovely. But there are no houses. That is Alcoa's aluminium smelter.
Wow.
or was. Or was.
It's just been decommissioned.
Not just, because it takes time. It was decommissioned in 2014.
Okay.
Took 10 years to clean it up, remediation. Last summer, they asked for proposals for what to do with that.
And that's a lot of land.
I'll tell you how much that is. Do you want to think in hectares or acres?
Go on, you tell me in acres.
Acres, 1,300 acres.
Right, okay.
1,300 acres. Look at that. Look at it on the left there. That's Geelong. There's the city.
Yeah.
How about, would you like to live on the nice little bit out in the bay there? Okay,
Wow.
come around there. Right, 1,300 acres of that. Now, I've done some work with people who are developers and stuff. What's that worth? I'll give you the nutshell. About 500 million.
Okay.
We reckon that's worth $500 million if they sell it. And they've been asking for proposals. Now, when you go tap, 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 Alcoa's market cap
That's exactly what I was tapping.
is 10 billion.
It's 10 billion,
billion.
5%.
So that's 5% of the company right there. Okay, right there. Now, that's just the start. Okay, that's just the start. Now I'll be quicker, I'll speed up. Right, they have a place called Messina in New York. That's an existing aluminium plant.
Okay.
But they don't use all of it. Who do you think they've had in there for the last 7 years? A Bitcoin miner.
Of course they have, right?
Why would they have a Bitcoin miner at an aluminium plant? Because aluminium is the most power-intensive industrial process known to man.
Yeah.
When that Geelong plant you just saw there was operational, it was drawing 25% of the entire state of Victoria's electricity.
Wow.
Okay.
Okay.
Okay, for that aluminium plant.
Yeah.
Aluminium is basically solid electricity. Think of it like that. That's what it is, right? So, what does that mean? If you're Alcoa, every plant you have has got to have a massive power supply.
Right
See
beside
where
it.
this is going?
Yeah.
So if you run that, you have been in business for years. You've got long-term power contracts with the utility supplier, with the grid. You understand that when the grid was built, it has to supply you first because you're the base load. When utilities talk about having a base load to sell to customers, they mean to Alcoa.
Right.
Or someone like them.
Yeah.
Massive industrial plant that's on 24 hours a day, we know guarantees us our take of our supply. There's our biggest, best customer.
Yeah.
So guess what? At Messina in New York, they've just done a new 10-year power deal. 10 years. They've signed that this summer. So 10 years of power guaranteed to them. Now, where are we going with this? That Bitcoin miner's lease comes up for renewal. Okay, Mr. Bitcoin miner, do you want to stay? Oh, do you know what? You're going to have to pay a bit more because we've got Oracle, Microsoft, Google,
Banging the door down.
Meta, Amazon saying, oh, could we put a data center just on the side of your aluminium plant? Oh, we could use your power. Oh, and it's already attached to the grid. So we won't have to wait for all that permitting from everywhere
Yeah.
else. Alcoa could be the power bottleneck unlocker
Yeah.
for the data center industry, except it's on 9 times earnings.
And what would that do to the aluminium price?
Well, the aluminium price is already, now I get back to the fundamentals of aluminium.
Yeah.
We've also had a little benefit. There was a fire in somewhere called Oswego, I think, Oswego, which is, can't remember exactly where it is.
Yeah.
Anyway, there's been a fire in America at something called Novelis Aluminium.
Okay.
This was last month,
Right.
taking it out. That aluminium plant is shut down.
And not coming back.
Not coming back till about middle of next year,
Okay.
okay?
Right.
What does that produce? 40% of the auto-grade aluminium for the USA.
Wow.
Ford has suspended production of their cars because they can't get the aluminium. Force majeure been declared on all the contracts.
Okay.
Alcoa doesn't really have much spare capacity in the States, so it's been sending it in from Canada.
Right.
But Canada, thanks to Mr. Trump, has got massive tariffs.
Yes. Okay.
But the spot price of aluminium in the States has gone so high, it was even worth doing. There we go. So there's your, now that's the global price, right? But in the US,
Local one.
if there's a local price, it's much higher.
Right.
So it's even worth with the tariffs for Alcoa. Now, I think Trump might roll back those tariffs because this is a act of God type thing.
Yeah.
This wasn't the plan. So he might roll them back for the period until Novelis' plant comes back online,
Okay.
which would be 9 months, which would be great for Alcoa. But even if it isn't, they're the only game in town. They're the only game in town. So that's the aluminium itself. But the key thing is why and when, when's this going to happen? Not on these earnings. On the 30th of October.
There's
That's
a
week
catalyst.
tomorrow. they're having an analyst day.
Right.
The first one for 4 years.
Wow. Ooh, I like this story, Julian. I like this a lot.
So now the annoying thing is, ladies and gentlemen, it went up 8% yesterday. Alcoa went up 8% yesterday.
Right.
And it went up 8% yesterday following, I think, that crazy Cleveland Cliffs.
Oh,
And everything else in metals, which went up madly, right, yesterday. Because there's one thing. So Cleveland Cliffs, you talk about a bubble in the market, rare earths, there's your bubble.
They said, oh, that rare earth thing, we might possibly.
Yeah. It's like, oh, there's a party going on. Yeah, we're there. We're on this one. They're a steel company. They make steel and they have mining operations to support their steel business. Yeah. They said there are indications there might be. Well, of course there might be. If the price goes high enough, you and I can have some rare earth probably in our garden.
Well, yeah, take me through what rare earths actually are.
Okay, rare earths are some lesser found individual memories. You need to really know your chemical periodic table to know the names of all these things. They all go under ridiculous names that I've never heard of, and nor have you, and I'm not going to try, right? Yeah. They occur in very small amounts, but you only need very small amounts. They do occur all over the place. Okay. It's just where are they concentrated enough to make it economically viable to mine them? Right. One of the reasons they're in China, though, it's not just because they're in China. They tend to occur along with other radioactive materials. Okay. They are an environmental nightmare. Right. If Cleveland Cliffs thinks it's going to start mining these things, I would get so far away from that stock, I wouldn't move. It went up 25% yesterday. That is the biggest sell. That is where you're talking bubble. You know why? We just talked a little earlier about Trump and his deal with China, right? How about there's a deal with China? Okay, I lower my sort of level of recognition for Taiwan. I give you some AI chips. I'll give you the second, third generation. Yeah. You give me the rare earth stuff. That's what I want.
So that would then take the concerns around supply of rare earths out of the equation.
And all these US stocks that have gone up go crashing back down. I would stay so well clear of these things.
And what stocks in particular have...
Oh, there's MP Materials, US Antimony, I think is another one. There's a few of them. I thought you guys will know. There you go, MP Material, he's one of them. There you go.
So there we go. It's gone from 23 to 82. Now, they have done a deal with the White House.
They have, but you know, they've done a deal, so's Intel done a deal with the White House, or the White House invested them. True. You have been paid. Don't be greedy.
What was the other one, sorry? MP Materials?
Something like US Antimony, I think it's called.
Yes.
Antimony, because antimony is one of the earths. I think it Antimony, I think USA Antimony or something like that.
There we go. Boom.
There you go. There you go. This is the sort of stuff.
Yes, that looks a little bit like.
That's the sort of Everest type chart you want to get out before you get to Sherpa Tenzing's heights up the top there. Yeah. Get out.
Okay, so we want to look at these things if there is a brokered deal between Trump and Xi, which so far there's always been in every single discussion with Trump.
There's always he basically rattles the tin. He's like the scaremonger. Yeah. You know, he's like a sort of pantomime villain. Oh, the bogeyman's coming. Oh, no, it's all right. You know, the good guy, the man in the white hat, turns up at the end. You know,
I'd say it worked with Europe though.
Worked with Europe, it did. But China plays poker better.
Yeah, they've got the cards and they made the cards in the first place.
Correct. Right.
Fantastic. Well, God, blimey, that's 6 minutes past 9 already, Julian. So we've gone well over. Let me just see if there's any questions. Any questions for Julian? Get them in really quickly. One day they're going to find vibranium if it's not found already.
There we go. I don't know what that is.
Yeah, well, Bigger Bia certainly knows all the rare earths there. Good stuff. Right. Thank you very much, as always, and we'll see you in a couple of weeks.
In a couple of weeks, yeah.
In a couple of weeks, brilliant. And by then
we'll have had a lot of big tech earnings, obviously, and we'll see where we are. I mean, I don't think there's going to be anything wrong with the earnings. It's whether the market has decided we've priced enough.
Which one would you be most comfortable owning out of Mag 7?
Oh,
Through
goodness.
earnings.
Okay, I'm going to take a stab and go with previously, and this is annoying because I'm trying to back job here, I'd have said Google, because Google was the one in the sin bin. So I'm going to go for the one currently in the sin bin, Amazon.
Right, okay.
Because they think Amazon's cloud growth is slowing. I think it's going to reaccelerate.
Right. Oh my goodness, if that reaccelerates, that stock is,
That's why.
Forget the
So,
troubles yesterday.
Yeah, so I think that, so that's why I've got biggest bang for my buck on Amazon.
Right. Brilliant. As of course, yeah, now we do, Vibranium is of course the fictional one. Is that not the one that in what Panther? In Black Panther, is it?
Okay.
Yeah, we were
Black
not
Panther.
watching
Yes. Very good.
I thought maybe
Okay.
that was what went into powering the DeLorean.
Oh,
Back to the Future.
Yes. That was just old tin cans and stuff, wasn't it? Oh, that's another use of aluminium, of course.
Yeah.
Canning industry, and they've been under pressure with inflationary pressures. But if they're easing a bit,
Yeah.
you'll get volume growth again out of the likes of Pepsi and Coke, and that's more cans. So basically, the aluminium cycle is at a low point, I think.
Yeah.
But we're not buying it for aluminium.
And nobody ever mentions Alcoa.
Nobody mentioned Alcoa.
No care in the world. So I'm going to go and price some options up from that. We have a recorded special from Angeline and Peter Hambro. He brought in some of his gold collection, and then Angeline sent him off on the tube on the way home to get robbed. So thankfully he made it safe. But he had about £20,000 worth of gold in his pocket on the Elizabeth line.
Very good.
Good stuff. Right. If you would be as good to give us a big thumbs up for a thank you for Julian coming along and giving us those great ideas, and for Scotty with his great. I was proud of him. Having sat next to him for 20 years, that was a cracking segment there. So yeah, give us a like and subscribe. And coming up, Peter Hambro. Otherwise, we shall see you tomorrow. Peace.
Hey, trader friends, we are in for a special treat. We have Peter Hambro, chairman of the Peter Hambro Family Office. This time round, we've managed to get him in with us. It's amazing. Thank you so much for coming all this way. And not only did he make it, he also brought something spectacular for us, right? Let's see it. Let's see it. Everyone's waiting.
Well, I thought that you should really understand what a gold bar is. This is a 10-tolar bar melted by Credit Suisse. It's 3 3/4 ounces of gold. Current market price somewhere around £11,000, $15,000.
Wow, right? What I'm
Wanna hold it?
I'd love to hold it. Oh, it's amazing. And the thing about gold, this coming from a goldsmith's granddaughter, is it's warm to the touch, isn't it?
Highly conductive.
Here we are. I might have to run off with this after this. It is real. I would bite it, but I'm not sure, Peter would like this hygienic, I'm sure. But it says a couple of things here. And what I'm also curious about is, am I not right in saying every single one comes with a serial number?
No, that's not. The number on there is the fineness of the gold. It's 99.99% pure gold.
I've read in various places that there are, certain houses where they have a serial number at the bottom or on the side.
The large bars do. The 12.5 kilo bars do. Those bars are the favourite bars for smuggling gold out of the Middle East into India.
Wow.
And in the old days, you'd see guys going to India with a big waistcoat and a coat over the top, and they had terrible trouble walking because they had those bars in little pockets in the waistcoats, and they said if they fell out,
They were listing.
terribly.
We were listing.
So that was a very, very, very. That is really just a means of payment in India. That's a.
Wow, incredible. So we.
I brought you something else too.
Yes, I'm.
just to give you some idea of what I think is important about the gold. Do you have did you manage to put the photograph up?
Yes, I'm going to put it up right
up
now as we speak. And also, I noticed there's something else.
Let's look at that, because the photograph first is more important. I was deputy managing director of McAdam and Goldsmith, which was then the largest gold trading company in London.
Mm-hmm.
But before that, in the 1960s, my cousin Jocelyn Hambro, who was chairman of Ambrose Bank, invited the Queen and Prince Philip to lunch.
Oh,
and
as you do.
worrying about what he was going to talk about and what would interest them, because banks are pretty boring for queens, he decided that he would have pile up £1 million. And that is what £1 million looked like in the 1960s.
Wow.
Which is simply amazing, because £1 million now looks like
Yes.
60 of those.
Yeah. You get a very tiny pile. Yes, and that's a fantastic way of explaining
the purchasing power.
Price.
The purchasing power of gold is vital. This coin, which was minted in what is now Belgium, roughly in the year that Christ was born,
wow,
2025 years ago, buys the same amount of gold now as it did then. So if you want to live a long time and have something that really holds its value, that's it. It's a Roman gold coin. So I thought they would be interesting things for your investors.
Certainly, and many of the investors watching the show have been asking, for you to come back, because when we were last on, you were very prescient. You said gold was going to head higher very soon, and it has indeed. I mean, it cut through that 4,000, no problem.
But look at silver. I told you the silver, which has done even better. That's through 50.
Mm-hmm. So the question everyone's been asking, I've been sent through these questions yesterday and the day before, especially on Friday too, when you saw the market wobble.
Yeah.
If you were looking at momentum, which would be the precious metal of choice? Is it silver? Is it platinum? Is it palladium? Where do you think the action is?
Well, there are all sorts of technical stories around at the moment that there is possibly a large shortage of silver, and the exchange is having trouble. That people are buying gold on the exchanges and then asking for delivery, which is causing a lot of problem, and that's really what's, I think, driving the price higher at the moment. And gold, to some extent, is in line with that. It hasn't performed quite as well as silver, but it's certainly looking good at the moment. And there doesn't seem to be anything really that is going to stop it. There's so much uncertainty that I certainly wouldn't dare go short of it.
What would you say to people who, have been in gold for some time now, and their cost base is low because they got in early, but they're a bit concerned that it's now looking toppy?
Well, you never make a loss by taking a profit. Gold is wealth insurance. If the gold, and you decide what percentage of your net worth you want in gold.
Mm-hmm.
If, because the price goes up dramatically in gold and the other one doesn't, maybe just take some off the top. But right this moment, I'm not sure I did find this.
You've been a perma bull for as long as I've known you, Peter, and rightly so. I mean, look at the price of gold; it's incredible. Lots of people here asking as well about if they've taken some of gold and they put it into miners, for example. We have a question from Andrew McKilvey, who has positions in Serabi Gold and Greatland. He's got a question for you. What do you think of and if you can talk to this, if not, just the gold price, but what do you think of the political risk of Brazil? He's thinking about Serabi Gold.
It's one of the many risks of the mining industry. I started a business in Russia, which we built into a couple of $1 billion, and the Russians stole it. There's nothing you can do. You can buy insurance, but it's incredibly expensive. I think the important thing is to be sure that the management of your gold company is good. That's the most important thing. Second is that the gold is there and easy to get out. And third, that the government there isn't going to steal it from you. Don't forget that the United States banned private ownership of gold at one stage, and that brought into life the South African coin, which everybody was so keen about, the Kruger Rand. I bought my first gold, which was a Kruger Rand, in about 1971, and I paid $36 for it.
Wow, incredible. Where do you, this is going to be a question that I've long wanted to ask you. You know, where do you store your gold? We've got Simon Popple, who's come in and said, you know, just effectively pay the company. Some people want to buy their own vault. I mean,
Do you think I'm going to answer that question?
What's your mother's maiden name? Everyone in the chat saying. Also, another a client of ours said, is shorting silver more advantageous than gold? I'm not sure you're keen on shorting silver now as well. I mean, it is very volatile.
Playing the gold-silver ratio is a very good way of investing. Gold is lacking against silver at the moment. Silver is saying gold should be over 5,000, but that spread has been moving the wrong way, and I haven't considered doing it myself. So I'm not. It's speculating in the short term is great fun. Can be very expensive if you get it wrong.
And very stressful. Silver's very volatile.
We shouldn't forget that the old saying that he who sells what isn't his and pays the price or goes to prison. And so going short is very, very dangerous in a market like this.
Speaking of which, one of the things that I look at most days now is I look at implied vol versus realized vol. So I march over to the trading desk over there, and I am probably the best return on investment on the Bloomberg terminal, as I'm ex-Bloomberg, so I literally like hog it. So implied volatility for silver at the moment is very far apart from actual realized volatility. And now that could tell you two things. One is that there are many coming into the market. So there's a lot of interest, open interest happening there. What you don't want is for the two lines to meet. At the moment, it's still quite a wide gap when I checked on Friday. We have another question from Andrew McKilvey. This is a really good one. Which metrics are the ones that you look at for miners? For example, AISC, resource estimates?
To be honest with you, the most important thing is the management.
That's what John Mayer says as well. Management is key.
It's really critical. It's obviously if you can find somebody with high grades, gold that is easy to dig out, but more importantly isn't refractory. Refractory gold is gold that is locked up in the quartz, and it's really difficult to get out. It's possible, but we built a $2 billion plant to do that in Russia. Worked very well, but people tend to buy into gold deposits that are refractory, and then they don't get the throughput. You've got the gold in the rock. You can see it, but you can't actually get it. It's locked in there. So be careful about refractory gold.
What's number two then? If management for you and John Mayer is number one, what is number two?
Well, I think grade is hugely important. Tons and grade I used to say the most important thing was tons and grade, but now I'm absolutely certain it's management. Having gotten into trouble a couple of times with that. I think the opportunity is perhaps more exciting at the moment. You can buy gold in the ground, effectively, at incredibly cheap prices, $100 or $200 an ounce. And okay, it's going to cost you maybe $1,500 an ounce to get it out, but the margin is terrific. And so I would look at the margin, the historic costs, fully expense cost, is probably the third most important thing.
What price, in terms of gold, would you consider toppy?
The world has changed so much.
It has. We were talking about this earlier on.
You really can't be sure. And I'm not recommending people should buy gold as a speculative thing. It's there. In my view, 10% of your net worth in gold is very, very cheap insurance, and then you don't worry about the price, because that's when things go wrong, and they do. Having gold and having physical gold. People have forgotten. I mean, I was born before the end of the Second World War, and I can remember huge places in London which were bomb sites. They became car parks, and people made a lot of money out of them. And look at what's happened throughout the Middle East. You see those photographs. Boy, if you were there and you had some gold, life would be a lot easier. That's the ultimate. And it doesn't feel at the moment it's that far away. That's what scares me. I mean, and it's because I can remember the effect of that. Two of my uncles were killed, and what it did to the family. But so there's that bit inside me that says I want stability, and that's where I'm. That's right. And I think we lull ourselves into the false sense of security that we are utterly safe. And there is some other interesting anecdote as well, that we're only 6 meals away from complete disaster. We get to a point where there's war, outbreak, whether here or elsewhere, and we have, 6 meals disrupted. It could be complete anarchy very quickly. I'm just showing this up because I ran this for our wonderful clients last week, because they were asking me about price momentum, and I haven't yet updated it, but it is from last week, so quite recent. And I was talking about the momentum seen in gold, silver, and platinum, and we are definitely seeing the momentum head towards platinum and also palladium now. Looking at the 1 month performance there and the 3 month performance there. And you can see that best 3 month performer was silver, but year-to-date leader was platinum, and which is dominating still. But palladium also looking like it's making gains now. Out of these 4, which do you think perhaps? We have many clients with different time frames and durations in their trades and investments. But if someone was looking to get to year end with one of these 4, which would give the best price momentum? Well, the platinum group metals are much more industrial because of their use as catalysts. And that has a big effect on it because of the industry. Silver has lost its industry level because there's no photographs being taken anymore. Platinum used to be, gold was the second. If you wanted something really good, you had the platinum this and the platinum that, and it's gone way, way, way down compared to gold, and has some catch up there, but it's not as fungible, and it's rarer, and it doesn't do what gold does in terms of showing off. Platinum makes dull jewelry, so I think that's possibly why it's lost sparkle. But it probably should come up. There's an argument for be short gold, long platinum, I think. Yeah.
So let's say one of the highlights. You've had such an amazing career one of the highlights of your life, Peter. When we've caught up at Minds and Money, we just never have time. It's like ships passing in the night. But now that you're on my show, what is if you had to choose one key moment
of the good things that happened or the bad?
Well, okay, pick one of each.
Well, the key moment was when we got raided by the Russians and they stole the business. That was a nightmare. First gold pour at Pokrovka and was amazing. We started that thing with virtually no money, and we were separating gold from the rock by very, very simple methods. So it was very, very exciting when we finally got and became as you can imagine, the freezing cold of Far East Russia. You needed a lot of vodka to get warm.
Thankfully, they make good vodka. Another question from the floor. When might you become concerned about the lack of further upside in the gold price in the short term? Or will you, I know you've said time and time again that you would not, because it's a long-term insurance, but are there any scenarios, Peter, I guess is what the client is asking, any scenarios that would make you think, okay, time, change of heart?
Absolutely. And Mr. Putin just withdraws from Ukraine. Israel becomes a holiday camp. All the people in Sudan are able to eat. Yeah, well, that would definitely have a negative effect on the gold price. But think what it would do to your ordinary shares and another thing, but the world would be magnificent. So that would be the biggest worry. Unlikely one.
Says with a smile. And the other thing that our clients like doing a lot, and it's almost a fine split down the middle between long-term and shorter term. So the shorter term investors and traders, they look to the gold and silver price to naturally take profit off at certain points. When is there a seasonal factor that you've seen in your long-standing career as to the best time to potentially front load, the best time if you wanted to ease off? Is there a seasonal sine curve?
One of the great heroes in the gold business is a man called Julian Baring, who was a very, very great friend of mine and ran the BlackRock gold operations. And he used to talk about the Christmas box. And on the whole, sort of November to mid-December was a very good time for gold. And he sadly died very young, but his son Justin is running a fund as well. And we always talk to each other about the Christmas box. And this particular Christmas box started as a Christmas box just before Christmas, and every so on we see kick through another 1,000.
What?
It's quite some Christmas box. Yes, I mean, from a seasonal point of view, you get the wedding season in India.
Yes.
Is important, and Christmas too. People are buying physical gold because it's a nice thing to give away as a present. I don't think we've really focused though on what the central banks are doing, and that's where the big pressure is coming from. The huge buying by central banks everywhere.
China's central bank.
And that was when I was in the trading business at Makata, that was my sort of main area. So I kept in touch a little bit with that. And China, interestingly, is the biggest producer of gold and the biggest importer, which is pretty amazing. And I think, as I may have said when we last met, it was something that the Chinese government did was to encourage the middle classes to buy gold physically so that they would be protected. There would be a safe, strong middle class if things went wrong. And that's very much what's happened. And I think that's why there is a level of stability in China that otherwise might not have been there.
I'm about to fly to Asia in about 6 days' time. And I'm going to be meeting with some central banks out there as well. There's also a sense that it's not just China that's trying to encourage the middle classes to buy gold. It seems like it's Southeast Asia as well.
Yeah. Well, it was a good idea of China, and people have seen that it worked. So why not do it too? It's the same insurance business. If people have got that nice little something hidden away, if anything went wrong, I could always flog that, and you know.
Of course, with the Chinese, you never really flog it; you just give it to the next generation.
Indians too.
Yeah. Chinese New Year, is that still a big part of the seasonal trend of gold? It used to be said that Chinese New Year there was a lot of gifting of gold.
A lot of gifting. Yeah, it is. It's not quite the same. It doesn't seem to. I mean, I can't remember it as being particularly, because there's so much holiday. People are doing other things rather than investing, which there isn't. Actually, it's a slight damping effect because the level of interest has gone down and everybody's drinking Mai Tai.
Or eating. There's a lot of eating going on over there. A question from the floor. You've of course, been in the industry for such a long time. Are there any particularly funny moments you remember fondly? Funny characters from the mining industry? Take it Bristow's just. I couldn't believe it when I saw it, because he's always been
Mark's
person they always see there first.
Mark and I go back a long way, long before when he was round gold. And we fell out.
Everyone fell out with him.
Fell out then before he was. But he's been a friend, and there have been some super guys. I worked for a guy called Henry Jarecki, who was a Jewish refugee, ended up in America, became a psychiatrist, was assistant professor of psychiatry at Yale, and picked up a book called Gold, How to Buy and Where to Buy Gold, or something like that, and discovered about the London gold market. And he had a brilliant idea, because the American currency was convertible into silver. And you had silver dollar bills, and you could take them to the Fed, and you got coins back. And the silver price went higher than the round dollar was worth more than the paper dollar. So he paid students to collect paper dollars, paying the people a premium for them, and they were bundled up, huge quantities, stacks of them, went to the Fed, and the Fed produced big bars, and he actually made enough money doing that to buy McAlter and Goldsmith from Ambrose, which was originally was owned by our family, which is Wiley. And he's still around. He's 90 and a bit, and still a very important player in that market.
Incredible. We're just going to sneak one quick one in for RSACs. Do you think it's still a good time to buy right now for the longer term for gold, or should one wait for a pullback?
There are times when you think, I think it's going to pull back. When it first broke through 4,000, I thought, well, it'll come back a little bit, and it has. I mean, I've got the notes that I wrote to people who do ask these questions, and I said I think it'll come back, and that's a good buying opportunity.